Hey everyone, it's John Feneck with the Feneck Commodities Report, and today with me is Glenn Jessome, who is CEO of Silver Tiger. That's SLVR in Canada and SLVTF in the States. Great to see you again, Glenn.
John, it's great to see you too, and appreciate having a tongue wag with you.
So the last time we had talked, it was with Don Durrett, my buddy, a few months back, and silver was really looking pretty ugly from a macro perspective. It couldn't get out of its own way. It was having trouble with 25, but absolutely having trouble with 26 an ounce and failed there for months, right? So tell us a little bit about what your thoughts are now that silver's, north of 27 and what you think this year might look like.
Look, from my perspective, I always go back to the macro. And the macro is really, really simple. I think your guests know who we are. We've been in Mexico, boy, it's getting on 30 years. We've built a number of large silver mines. Every project we've had has either become a silver mine or it's been sold to a major. Tiger's just the next one. We're in the silver business. We never leave the silver business. So we think it's the best business, and we think we're in the best jurisdiction. A little bit of noise down with the election, all that shall pass. We've been through many, many of those elections. But back to why. There's not enough silver, John. Okay. And
Right.
and we've been making silver for 25 years, a lot of it. And never have we seen it like this. You look at a world that needs 1.2 billion, okay, silver ounces, and I see a sight line to 800, maybe.
Hmm.
Um, we talk about true silver projects, okay? Right now, today in 2026, forgetting the byproduct, there are only 51 real silver mines in the world. They're just a primary silver mine. By 2027, that'll be down to 44. By 2028, that'll be down to 38. I don't have to do much more than just tell you that, and we already have a problem. And a lot of expensive producers out there, not me going against my peers. Look, so I'm really looking forward in that period I just told you about will become 39. It's going to be a nice list to be on. I'm going to add to that 38 in 2020. 2027, I'll add to the 44. But that being said, all-in sustaining costs out of control. Up 57% last year to $16.27 an ounce across those 51 projects I just talked about. Those are real
Right.
numbers from Silver
Yeah.
Institute. Going up 9% a year every year. Just do the math. Why do you think silver's got to rush up to 24, 25, 28? Well, who's going to make it if it's going to cost them 22? They ain't going to be able to sell it for 18. They're out of business. We all are. So, I'm really excited about where we're going. And I'm really excited that we put a decade of work in to get to the point now we're almost ready to build either 45 in 2027 or for sure 39, number 39 in 2028. So, yeah, I'm pretty excited to be in this business right now.
That's great. So when you look at the all-in sustaining cost of Silver Tiger specifically, how does that rank versus, in your view, versus what the
11.
11, okay, $11.
$11. Go right now to the PA and look at it. $11 all in sustaining cost. Average 16.27 going up. Ours is going to be pretty stable around 11. So there's a reason. Yes, great question. Why I'm very, very excited about the work we've done to become a big low-cost silver producer. So yeah, that's it's going to be exciting time. And the PEA delivered some robust economics. We should talk a little bit about that. But we're
Sure.
already on to PFS right now, and that's what we're going to build on. So we put out the PEA. We came out with let's just round it off. September of last year, time for Beaver Creek, couple of 100 million silver equivalent ounces. That's a sizable deposit. Half in the
Sure.
underground, half in the open pit. Let's get the PEA done on the open pit first and do all the work so we can get the PEA for the underground, which will be the big, big part of this going forward for years and years and decades to come. Big, big district as we build it out. That PEA was, fantastic. 287 million. That came in November this year, almost a 300 million USD NAV. IRR 57%, capex 59 million USD. These are all USD numbers.
Okay.
The thing makes $500 million over the first decade, that kind of investment. Return of capital, 1.7 years. But I mean, the minute we put that in November, we were, halfway already done getting to the pre-feasibility study. You're going to see that the next test, which we're going to see here in July. And, we're very, very comfortable with the way the deposit is working. I'll tell you about what we're going to do in that pre-feas and what the bankers are telling us. So we're already engaged looking at the asset inside the data room on a confidential basis, that we'll be able to build this on the PFS. So PFS in July. A lot of people, this is what people need to look for, especially, look, a lot of geologists and all those mining engineers, they understand PEA to PFS. But I'm talking to your group. I love talking to the retail investors because, they got to know what they're looking for.
Sure.
PEA is usually big number, big NAV, because it usually, after you do the rest of the work, it goes down. Because remember the difference in a PEA, PFS as the biggest one. Sure, we do metallurgy, we do all kinds more work of drilling, geotechnical holes. We'll talk about that, but it's only to include measured and indicated. It can't have inferred. So you see some guys come out with this PEA with a bazillion ounces and a big NAV, and then they move it to PFS and they only brought over a little bit of the inferred, and it goes.
Yep.
Remember, ours was lovely because it was about 80% indicated and about 20% inferred. Two things, and I can talk about this because it's in the press releases for the last couple of updates. People should go look at that. We are focusing on moving almost all of that inferred to indicated. We hope and we think that we're not going to lose a lot there. And as we drilled more, remember, you never stop drilling here. We've done another 40,000 meters or so since we put the PEA out to get to pre-feasibility. We're still drilling away up there. Results coming out every couple of weeks when a lot of people aren't doing a lot. We think we're already showing 10 to 15% more ore and more metal. So we could be one of these guys comes out with, not guaranteeing it, but what it looks like so far, not go down on your PE, actually go up. So keep an eye for that in the pre-fees. And if people go, oh, they only went up a little bit, remember, most times you go down. So that's really important. Really important. So we're expecting some real nice economics, and it's going to spit out all the same stuff. What you're going to do is you do more drilling, you do more metallurgy, that's all coming along beautifully. You do all the geotechnical drilling, you bring Golder in to do all the design, you bring the engineers to do the design. So now you've got a very much refined study. And we're expecting this very refined study, which we think will be enough to build on. I'll tell you why in a minute. And that, I think, is going to show some extraordinarily good economics. Look at the NAV compared to the PEA. Look at the IRR compared to the PEA. Look at the payback compared to the PEA. Look at the costs. All of those things, we're pretty excited to get this out there. Still a couple more months to work to do, but I think that people need to go compare the two and go, wow, that's impressive. So that's what I'm getting people ready for. No guarantees, but so far it's looking very, very good.
That's good. So you mentioned that's in July.
That'll be July. We were trying to get it in June, and it's, things just drag a little bit. July, August, the heat's on my guys because, Beaver Creek is sort of the start of the next season, like a new hockey season, new baseball season. And I'm going to go to Beaver Creek with something, and that something's going to be that PFS. So that's what we're pushing for. So I shouldn't say before Beaver Creek. It's a terrible line in the sand. July, August is when you're going to see that thing, and or somebody's going to be in trouble. So there we are. But one thing I'm going to tell you why was really important in this. Think about 10 years or 11 years of production, okay? The way you have to bank these things is that'll be a lot of measured resource, okay? I'm sorry, that'll be a lot of indicated resource. But really what the banks can hang their hat on to loan you the money, a big chunk of that 59 million CapEx, is they want to make sure out in front of them they got their payback. So the magic of Tiger is, if you look at the PEA, and then let's look at what comes out of that PFS this summer, the payback's incredibly short. You see projects 3-4 years, we're 1.7. Why? Because in the middle of that start pit, there's a beautiful starter pit. Call it the first 3 years of production, we don't have a lot of time to get into tons and all of this stuff. That first 3 years, the grade is almost a gram gold, and the strip, because we're measuring gold, and the strip is almost zero. And what we've done is we've drilled that thing and 25-meter spaces, so that now when that pre-feasibility study comes out, the first 3 years of
Mhm.
production are going to be, are not just going to be indicated, they're going to be measured. So that's very, very important that you got that, because that's what your bank can say, well, there's 3 years of that. I'm getting paid back in 1.7. We can do it on that. That's really what this
Gotcha.
deposit, because of that starter pit, allowed us to do without going to feasibility. So that's exciting too. And there's a lot of banks right now looking at all of our data as it comes out. Remember, when they're on a confidential basis, you can't see it. I know it. They see every step, so that when the pre-fees actually goes out, they've studied it all, and we can get a quick answer from them of, okay, are you willing to fund it?
Sure. And you had mentioned earlier that half of the project is underground roughly and half is open pit. Um, is that
Right now, great question. Uh, right now, let's say that what I was rounding, I think it's about 90 million silver equivalent ounces in the pit, and call it 100 million underground. Okay.
okay?
The pit will get a little bit bigger. There'll probably be other pits we discover along this 35-kilometer trend. We're just talking about first 2 or 3 kilometers here. That pit will get a little bit bigger. It's not going to double in size. Okay. It is what it is. It's going to get a little bit more robust. We'll drill north and south because we just stopped drilling, but it ain't going to go from 90 million to 180. It's just not going to
Sure.
happen. But the underground, remember, we've got 25 kilometers of this trend.
Mhm.
We've drilled 4 kilometers of the trend. It's all the same. So basically, we have done limited underground drilling, and we already have 100 million silver equivalent ounces. My technical team, this is a district, we know that. My technical team says, Glenn, they'll be drilling ounces off 10 years from now at Tiger, mostly underground, 20 years from now at Tiger. Will the 100 turn into 200? Probably. Could it turn into more? Probably. But in the limited drilling we've done underground, we've already got 100. So what we're going to do is that's the next. So all of the work on that PEA, we've been working very hard for the PEA for the underground. Okay. And we have enough drilling. We've identified about 10 to 12. We have an 800. Remember, we're permitted for that 800 ton per day underground operation. I think
Right.
everybody knows that. So we're going to tailor the PEA to what we have as of right. If we have an 800 ton per day operation, underground high grade ore, open pit's not high grade, bulk tonnage, lower high grade for a pit in Mexico, but that underground is very high grade. 12 years, what's that look like? That's what the PEA is going to be. And that PEA, the drilling's done, a lot of the work is done on it, all the bench work's done on it. We're just waiting for the final metallurgy on that, and then we're going to put it all together. I would like to try to get a PEA out on the underground before the end of the year. That's what I'd like to try to do.
Yeah.
But if anybody asks me when, first quarter of next year.
Gotcha.
So then
Okay.
you're going to really see what Tiger is. You're going to see the bulk tonnage deposit, PFS for that coming, and you're going to see that first economic test for a chunk of that ore that we've already delineated, which will grow through the years, in an 800 ton per day mill with about a 10 to 12-year mine life to match up with the open pit. That's the first inning. So that's really exciting where we are right now, because
Mhm.
both of these types of deposit are moving to economic tests. The pre-fees for the open pit, which we're ready to go on as soon as it's done, and the PEA for the underground, which everybody says, oh, we got the PEA done, let's do the pre-fees for the underground now. You'll have half of the pre-feasibility work done for the underground by the time you issue the PEA, just like you saw the process we used with the open pit. PEA and then quickly pre-fees. That'll be the same plan for the underground.
Okay. Well, I wanted to bring up two things before we wrap it up and have you talk about each of these because I think these are stumbling blocks for clients, because I'm on the phone with clients every week and
Mhm.
you brought it up yourself with regards to the PFS. Typically, that's a selling event in the past because we've been in such an inflationary environment over the last few years where CapEx will go up dramatically a lot of times. First question is, with 59 million in capex US right now, what's like the worst case scenario that we may see in July or August in your view?
Worst case as far as what?
That going from 59 million to say 80 or 100 or 120 or
Uh, I never say zero, but I'm not expecting the CapEx to change very much at all.
okay. So then the
You know,
second thing to bring up, I think, is the stock is trading right now at 13 cents US like it's an open pit only stock in Mexico, right? I
that's correct.
mean, when
Well,
you just
we
got done
all know
saying,
that it's binary. It's binary, and that's fine. We'll
I don't
have to
know
get
that
through the
I
election.
don't know that all the clients know that though, because like you and I talk about this all day, but I'm
Yeah,
saying,
right.
the fact is when you just got done saying 100 million ounces of the 190 are in underground,
Yeah,
that should be telling clients something that this is not all reliant on open pit mining. And so
I I love
that's
that.
yeah, that's like big to understand because right now everything in Mexico is getting hit with the same, brush. And that's really not fair because what if we do have a positive resolution later this year, and I want to have you back in June to talk about the election results.
Absolutely. Yes.
But right now it's just speculation. So, it is what it is. But I wanted to point out to listeners that, this is something that is, let's just call it half and half underground to open pit. It's not all open pit.
So let me explain how we've been doing our business in Mexico for a long, long time. Um, we've always developed mines on flowering epithermal systems. Going underground for narrow vein is really tough, and
Mm-hmm.
people have proven that. So you get the bulk tonnage deposit, you get that, you start with that, you cash flow that, and then you go underground. And I'd like to think people think of Tiger like this. The open pit I'm talking about is the first inning. The other 8 innings are really going to be the underground. That's
Gotcha.
really what it is. That's number one. Number two, the right way to go to attack that underground when it's ready is to get the cash from that open pit, which is going to generate 50 million USD free cash flow almost per year for 59 million US investment. Find a better one. We think it's the best pit we've ever seen in Mexico. Maybe anywhere. It's not gigantic. What does it make money? That's the right business model. We're finishing that. We were always finishing that. And then we're very comfortable. We've been in Mexico a long time. The election on June 2nd is going to come and go. We are very, very comfortable that we're going to get our current underground permit amended so that we can mine that open pit. And we're going to take that right to the nth degree. But we're not binary. We're going to have that ready. There it is. When I get that piece of paper, whatever else I'm doing at the time, I'm dropping and I'm building that open pit because that's the right thing to do. Second thing is we're not binary because when we get that done in July, we got to wait a few months or 6 months, whatever we got to wait to get our permit. So we go right back to the underground. I'm permitted as of right for an 800 ton per day mill, a mill I already own, which I've bought, which is now on the mountain. We're always moving ahead. We will come with a PEA, hopefully the end of the year, maybe first quarter. And then I'll jam that, use the time frame, 5 or 6 months later, it's a pre-fees. Just using the same time frame here, can't guarantee it. And then
Mm-hmm.
I'm ready to build that. So we're not stopping, and there's no all or nothing here, because we are permitted. And because people have to remember, I'm not looking for a new open pit permit. Ours is an amendment to the current permit to allow us to do the open pit. So look, we've been here. Maybe I'll be proven to be really not very smart, but we've been doing this a long time, and we know we just have to basically do the work, keep moving the project forward. We've always got the permits in Mexico we've needed for 25 years, all
Mm-hmm.
of them. We expect we're going to get all the rest. And right now there's a lot of it is binary. It's either, oh, you got to be in Mexico, or I don't want to be in Mexico, because we're never leaving Mexico. What we're doing right now, double down time in Mexico. This is
Mm-hmm.
where all of the most opportunity is made. We've seen at the bottom of these cycles and markets in Mexico. And boy, the investors who believe us at the price it is now, I mean, the alpha return they can have is incredible if they want to own the stock. And if they thought, I think it's important. If I'm a retail investor, okay, I buy this stock, and all of a sudden, they don't get their open pit permit. Do people think we're going to zero? We're already priced as though we're not. Nobody thinks we're going to get it. I
Right.
mean, because it's hysteria out there. You look at the internet. Oh, Mexico's done. Mexico produces 150 million silver equivalent ounces of the 800 million the world needs. 70% of that, over 70% of that comes out of open pits. People just need to think about that.
Yeah,
So, yes, it's
that's
all
good.
going to work out, and we're going to be at the front of the chain. But right now, I'm getting zero value for it. When that trade turns, you watch the value appreciation. That's why people want to own the stock. Worst case, it's going to be a very profitable, high grade, underground silver mine that I'm already permitted for. We're pretty good at building mines that's going to go for the next 20 years. That's the worst case. Pretty good worst case.
It is a good worst case. And the fact that you have 30 plus years of experience in that jurisdiction
Right.
and you can build this gives you a leg up, I think, over a lot of other silver juniors in Mexico.
And I'm going to tell you one last thing. And this is the last thing I'll say. I think our retail investors are very, very smart. But there are some people that make a career out of being pretty smart precious metals investors. Steve Land at Franklin Templeton, Joe
Mm-hmm.
Foster at Van Eck,
Sure.
Maria Smirnova at Sprott, Peter Miletus. I can go on and on. You know who our 5 or 6 top institutions are. In the last 3 years, they've given us $75 million at far higher prices than we're trading at right now to go do exactly what we're doing. And none of them, I don't hear from any of them that they're complaining. Actually, I got a bunch of them going to site with me next week in Mexico, the people I just said.
Okay.
And so I think people should take something from that because the smartest people have bet, yes, Mexico is going to work out. And yes, they're going to build that. And that's when you start talking about 10 or 20 times returns from where we are right now.
Yeah, absolutely. And I won't say 10 or 20 times, those were your words.
I
But
have to be, yeah. I mean, if Don Durrett was on here right now, it would be 500 times. But I gotta leave that to you guys. I mean, I gotta just do it on the basis of NAV and price, and you know what I gotta do.
yes, I'm just kidding.
Yes,
But yeah, no, great job, Glenn, and it's always a pleasure to catch up. I'd love to have you back on early June so we can talk
yes,
about the election results and
wonderful,
catch up on where things are headed because we'll be about a month or two away from the PFS at that point.
wonderful. Thank you, John. I really appreciate it. You have a great. I think you're heading off to Washington. Is that what's going on? What
Yeah,
show?
yeah, I'm an advisor to the Energy Transition Conference in Washington D.C. So
Wonderful. Well, we'll have a
I'll be
couple. I've got
speaking.
one of my mining engineers down there. You might run into him just scoping things out down there and seeing what's going on because we haven't been to that one yet. We always go to Beaver Creek and Zurich. So maybe
Sure,
next year we'll have to come and attend that one with you.
that'd be great.
Okay,
Thanks a lot,
wonderful.
Glenn.
Thank you. See you now.
See you soon.
Bye.
Bye.